They are thinking that premiums are always high in these policies, that early cash value growth is always slow. Permanent life insurance can add value through the guarantees, through the tax-deferred growth, through tax advantage access. Critics say it's a bad idea when sold as your primary investment. Of course, they want your money. Is life insurance a bad investment? Life insurance is often attacked as a poor primary investment in the battle for dollars. But even those critics admit that certain kinds of permanent policies can be useful to supplement your other investments when you need lifelong coverage, tax advantages, or estate and liquidity planning. So perhaps critics argue it's a bad standalone investment, but this is typically based on a very limited understanding. They are thinking that premiums are always high in these policies, that early cash value growth is always slow, and that long-term internal rates of return lag behind simple strategies, oversimplified, like buy term and invest the difference, and specifically looking at low-cost stock or bond funds. However, even the critics admit that for people that want certain advantages, guaranteed growth, leverage, liquidity, tax-favored cash value, that these policies can be a useful supplement, we'll put it that way, for these other kinds of investments. So 3 takeaways. The critics say this is not useful as an investment alone, but they admit that if you add this to the other kinds of investment accounts that you hold, it can provide some very powerful benefits for safe capital when you break it all down. Number 2, as a planning tool, permanent life insurance can add value through the guarantees, through the tax-deferred growth, through tax advantage access, liquidity through policy loans, and the leveraged death benefit. The key issue, number 3, is fit. Critics say it's a bad idea when sold as your primary investment. Of course, they want your money. But it can be appropriate as a niche, long-term asset layered on top. We talk about this a lot. It can be a way to secure your other qualified accounts from risks such as sequence of returns. For related glossary links, check out term versus whole life insurance, cash value life insurance, buy term and invest the difference, internal rate of return, life insurance retirement plan. Thanks for watching.